Increasing worries about disinflationary and even deflationary pressures throughout the world in the back of the IMF's downward revisions to global economic growth. I'm Cardiff, Garcia of FT Alphaville. I'm joined by Tracy Alloway, the FT's U.S. financial correspondent. Tracy, thanks for being here. Let's start by talking about the U.S. dollar. Sure. Okay, it's been rising aggressively all summer against most major currencies, and it shows no sign of slowing down, right?
That's exactly right. It's funny because the strengthening dollar used to be a sign of the good fortunes of the U.S. economy and the fact that the economy was getting a little bit better. Now, however, we see a completely different dynamic where people are starting to get a little bit worried about the strengthening dollar because it means, maybe disinflation back into the market. And it also means that we see an impact on bonds and stock prices. And we also have to start worrying about what policymakers make of the increasing strength of the U.S. dollar.
Yeah, and let's talk about activity in financial markets in a little more detail, especially in the last few weeks. S&P 500 falling pretty aggressively, especially in the last couple of weeks. And talk a little more also about what's happening in fixed income markets, which is your specialty.
Sure. Well, we have seen stocks kind of moving back and forth. We've seen the VIX, which is generally considered Wall Street's fear gauge or whatever you want to call it, pick up a little bit recently. Volatility really has come back in markets, especially in fixed income markets. We've seen the U.S. Treasury yields back at, I think, 2.3%. We've seen a rally in agency bonds, really a flight to quality based on fears about a strengthening dollar and a weakening global economy.
Right. I'm almost tempted to say that everybody spent the first half of the year complaining about too low volatility and the market was only going up, and now everybody's complaining about the exact opposite situation, the reversal. But it actually is more serious than that. The outlook for the global economy just looks a lot worse than it did earlier in the year. But we can't talk about this without getting into the Fed a little bit. Sure. It has a big decision to make at the upcoming meeting later this month, all right? QE, the announcement that QE is set to end is going to happen at that meeting, or is expected to. And the Fed knows that it has to change somehow its language on when it's eventually going to raise rates. You look at the minutes to the last Fed meeting, it doesn't seem to know how it's going to do that. But the really interesting issue here is that we're getting pretty close to its estimates for full employment, while inflation keeps running well below its target. And in fact, it's been moderating all summer.
Yeah, that's right. I mean, the words rock and a hard place kind of spring to mind when you think about the Fed. The other dynamic we have going on is we've seen oil prices moving quite a bit over the past few months, and that also has a major impact on headline inflation. So it will be very interesting to see how policymakers react to this new dynamic.
That's right, and we almost have to end this video with a chart of 5-year break-even inflations, and you can see there that they've just been plummeting since the start of the summer. So. Something to watch. Tracy Alloway, thanks as always.
Thanks, Cardiff.
Thanks for watching, and if you want to see more, go to ftalphaville.ft.com and ft.com.